Wow. Now, this is something I did not expect to happen. A good friend of mine lost her house to foreclosure due to running out of insurance money. Let's talk about that. It's a great story, great lesson in this. A little sad, but it's a great lesson that I wanted to talk to you guys about tonight on Tuesday Tea Time. So, welcome. Grab your tea. We're going to talk about it tonight. Welcome to Tuesday Tea Time and Insurance Tips. I'm Sybil Green Padilla. I'm your host here. I'm here every Tuesday night to provide you wonderful insurance tips, nuggets, needs to know about your insurance. We do it in a nice laid back atmosphere with our tea and just like chatting. So I hope you will stay tuned and I'm going to tell you the story. So let's take a sip and let's talk about it. So this is going to be more of a storytelling. This is a good friend of mine's. I've known her for years. Her and her husband, just the greatest people. They live out of state. They don't live here, but we've kept in touch over the years. But I thought about this and I wanted to share it with you tonight because it's a great lesson in here. And I spoke to a client today that's kind of in a similar scenario. And I shared this with them because I thought about my friend. So this is a good friend, her and her husband, great people. They had an insurance policy already before I even got into the business. $150,000. It was a term policy. It was actually 30-year guaranteed lock-in rate. So they had, a lot of ducks in a row. So when I, kind of approached them, they had already had insurance. They had a $125,000 house. So the $150,000 they had, they figure, if something happens, that would be able to cover the mortgage, which they would be correct. But he had two beautiful girls, and just gorgeous and pretty nice house. Now he was blessed, got a promotion. Another company offered him a job where he was going to be making quite a bit more. I think he ended up making over six figures. I think about $120,000, going from maybe 80 to 120,000. So it was over six figures. So they were really excited and very happy. And of course, she didn't have a bad job herself. She was making about 60,000 herself. So not bad. So they had a great income with his 120 or so and her 60, almost 200,000 a year. Not bad. So with all the wonderful upgrades in their life, of course, they wanted to buy another house in another nice neighborhood. And they always wanted to put their kids in private school. So they made a lot of upgrades. So they actually bought this beautiful home for $400,000 in this really nice neighborhood, beautiful neighborhood, 4 bedrooms, and they had 3 baths. And they decided to put their girls in a private school instead of public school. So really, really, really was a great blessing for them on that increase. They also had wonderful cars. They traveled. They were able to just live in the life, what we all want to do, right? Just living our life, our best life, right? So I did approach her and I said, hey, this is awesome. She said, yeah, Sybil, he got a raise and he's making this and we're living pretty comfortably. So we're, really happy. I think the mortgage may have been $2,500 or $2,000. I'm not sure. But I said, hey, that's great. But, you only have that 150,000. I would encourage you to maybe upgrade your insurance because if something happens to either of you all, that's, I don't know how, how long you'd be able to upkeep, and you just put the girls in private schooling, all of that good stuff. And she said, yeah, we might take a look at that. And they never really never did get it, never did feel the need for it at the time. So he did pass, he did die. And when he died, of course, they had the policy still in place. And she filed a claim and she got the $150,000. Now the mortgage now is not 125, it's 400,000. So the 150, of course, she couldn't use that to pay off the mortgage. I don't even think she used any of that to pay a lump sum. So I know she paid off probably some things, but I don't know exactly what she did. But long story short, she did call me and let me know that she did lose the house. I was totally shocked about that, because I thought, never expected that to happen for her. So she did tell me she had foreclosed on the house because she couldn't keep up the payment. She said, of course, she ran out of money. Her $60,000 a year could not keep up that big mortgage they had. Plus both of the girls were in private school, and it was just really, really, really tough. She had already gotten another job, but she didn't like being away from the girls and, all of that. So she said she couldn't keep it up. So she lost the house, beautiful home, lost the house, and she had to go back home and live with her mother, which her father had passed. So it was just her mother. So her mother was pretty excited because she's going to get this baby and see her baby. Mother's a senior, so she was able to, be there to care for her mom as well. So she was going to move back in mom. And of course, the girls loved their private school. They were sad. They had built up friendships there. And now they have to, be in another school. So she wasn't too happy about that. But she said, Sybil, I just got to get on my feet. And that's so understandable. And what a blessing when she had her mom to fall back on, to be able to stay there, help her mom out, get on her feet a little bit. Eventually, she, probably will be getting another home, an apartment. I know currently she's still with her mom. So I'm just kind of sharing that because, guys, when your spouse dies, you all have joint debt. So with that joint debt, you both co-sign, well, not co-sign, but you both jointly sign for that debt. So like mortgages, automobiles, any other loans that you guys both sign, when one of the spouses dies, the surviving spouse is going to be responsible for that debt. Debt doesn't go away because one spouse died. Both of your names on it, the mortgage people, the automobile company, the creditors will be coming after you, the surviving spouse. So you want to protect yourself. Husbands, you want to protect your lovely wives, because what's going to happen is, hopefully we don't want this to, but this could happen to your wife if there's not enough insurance. So I wanted to point that out, because a lot of people are having to dig into their savings, their 401k, and, they're just tapping out their retirement sources. Crowdfunding is a big thing. GoFundMe, which you all know how I feel about that. That is not insurance, but they have some great warm-hearted people that do help with that. And we just thank God for those people that do help. But that's not what you want to kind of depend on. So I do want to just kind of put that out there. If you upgrade your debt, you definitely want to upgrade your insurance, because that is money that your spouse is going to be able to take care of that debt once you're gone, because you're replacing your income. So just think of life insurance. Not only does she have to cover, or he has to cover, a burial cost, but also that insurance has to replace income. So whatever income your spouse is making, you want to have enough insurance to cover that for at least, I always say, at least give your spouse 2 or 3 years to be able to stay in that house that they're in before they decide what they're going to do. Give them a little time. If you can't afford, a big policy, you want to give them enough to at least be able to stay in that house with the kids for a few years, because after death is traumatic. You don't want them to have to uproot real quickly. You want to give them some time to be able to live normal until they decide if they're going to downsize, sell the house. You definitely don't want them to have to foreclose on it, but they can decide to sell the house, downsize to a smaller home, or, it gives them some options when you give them a little bit of time to, kind of work out things after your death. So keep in mind, if you've increased your debt, you started off with a policy, you have life insurance. I talked to this gentleman today. He had life insurance, and he has some upgrades in his life, and I suggested the same thing, and I told him this story. So I hope that he's going to make the right decision. He didn't make the decision today, but I did put some thought on that. So I did want to share that with you guys tonight, because some of you guys may be in the same situation. So I want you to know that is what you want to do. You want to look at maybe upgrading, adding another policy of some kind to help your spouse replace your income. Okay. So with hers, it was a $400,000 house, and I did the math on this, the same thing I did for him. It's $24,000 a year. The mortgage, say, was $2,000. I think it was more than that, but just say $2,000. That $24,000, 16 years she would have to pay on that house, or even more, to pay off that $400,000 mortgage. So that's quite a long time that they would have to keep that mortgage payment up. So it's really nice if the insurance money can just take and pay off the whole mortgage, but that doesn't happen a lot of times. So if you can get close to it, she can take some of it and pay it down maybe. So I'm not sure what my friend did, but she lost the house. So you don't have to do that. You can put some preparation, put some things in place to make sure that doesn't happen to your spouse or to your loved one. So I hope that information was helpful for you tonight. I love bringing these tidbits and nuggets to you, and I hope you're getting some value out. And if you are, please like and share. And please subscribe to my channel. I'm here every Tuesday night, and hit that bell so you'll get the notification when I upload, okay? So thank you so much for joining me. Hope you enjoyed that, got something out of it. So thank you for joining me. You all have a great afternoon or great evening, and take a sip, and we're going to say bye-bye for now. Thank you for joining me. I'll see y'all next Tuesday. Bye-bye.